Good morning, students. So coming out with the next problem, that is problem number 6. So what they have given here in the problem number 6, B of Bombay consigned 400 packets of coffee to K of Kanpur. So B of Bombay is consign, I'll say this later. B of Bombay is consigner, K of Kanpur is consignee. The cost of each package was rupees 300. So cost of each package was 300. They are consigned 400 packets. Each packet's cost rupees 300 each. So consigned goods, so 400 packs of rupees 300 each, that is 1,20,000. And a sum of rupees 2,000 was paid towards freight and insurance by B. So this means this is the freight and insurance charges worth of rupees 2,000 is the expenses of B. B is the consigner. So B consigner's expenses, freight and insurance 2,000, that is non-recurring expenses. So next is 60 packages were damaged. However, the consigner received rupees 400 for the damaged package from the insurance company. So here they says, so at the time of transportation they have damaged the worth of 60 package. So anything damaged in transit, that is an abnormal. We don't know that it may occur or may not occur. So that's why it is considered as abnormal. 60 packets is abnormal loss in the transit, and they also received rupees 400 for that, 400 from the insurance company. So the consignee accepted bill of exchange for rupees 60,000 for 50 days as an advance to B of Bombay. So this means the consignee has paid worth of rupees 60,000 for B of Bombay. So consignor has received the advance worth of 60,000. The operating statement from the consignee disclosed the following information. So what are all the accounting statements they have sent is, so they says that they have sold, the consignee has sold 280 packets were sold at rupees 360 per package. Now the sales will be 280 into 360, that is 1,800,000. So and then also the damaged package, so that 160 damages in the transit were also sold at rupees 100 each. So 60 damaged packets were also sold at rupees 100 each. Totally the sales is 1,06,800. So the next, they also paid rupees 1,400 towards godown rent. So this is consignee's expenses. What they are saying, godown rent 1,400. Next, rupees 1,000 for carriage outwards and rupees 3,400 towards clearing charges. So what and all, godown rent 1,400. Godown rent is in recurring expenses. Carriage outwards is also worth of rupees 1,000, that is also recurring expenses. Next is clearing charges. Clearing charges is 3,400, which is a non-recurring expenses. Next, the consignee is entitled to a commission of 10% on the sale proceeds. So consignee is entitled for the commission of 10% on sale proceeds. The total sale is 1,06,800. On 1,06,800 is entitled of 10% commission. So commission is worth of rupees 10,680. So this much is about regarding the adjustments. At the end of the accounting period, K of Nagpur sent a bank draft to B of Bombay. You are required to prepare the necessary accounts on the books of consignor B of Bombay. So in the books of consignor, you are supposed to prepare the ledger accounts. They ask for ledger accounts. So what are all the ledger accounts will be prepared in the books of consignor? In the books of consignor, that is B of Bombay means, so one is consignment account, next is consignee's account, and then goods sent on consignment account. So coming on to next, before preparing ledger account, we are supposed to prepare the calculation of closing stock. So how we will be calculating the closing stock value? So as you know, there is a format. There is goods sent on consignment 400 worth of 400 packets of rupees 300 each. Quantity is 400, amounting to rupees 1,20,000. Next is non-recurring expenses of consignor. So there is only freight and insurance. Here freight and insurance 2,000. Next, the value, if we had this both, we will be getting cost of goods in transit. There is no normal loss in transit. There is an abnormal loss in the transit. The formula for abnormal loss is, that is goods available for sale divided by quantity of goods available multiplied by abnormal loss units. So you have got the quantity is 60, the loss of quantity is 60, the value of this 60 quantity is 18,300, and then we'll be arriving with cost of goods received by consignee, that is 340 and 1,03,700. So next is non-recurring expenses of consignee. We have three kinds of expenses of consignee. In this we'll be considering only clearing charges because other two are and recurring expenses. So non-recurring expenses of consignee is only clearing charges worth of rupees 3,400. So these expenses will be adding back to the cost of goods. So now we'll be arriving at 340, quantity is 340 amounting to rupees 1,07,100. So this is called as cost of goods available in the godown. So for this we'll be minusing normal loss in godown and abnormal loss in godown. So there is no normal and abnormal loss in godown. So next coming on to, if there is no normal and abnormal loss, the amount which is remaining will be called as goods available for sale. So from this we are supposed to calculate unsold stock. So formula for calculating unsold stock is goods available for sale minus goods sold. Goods available for sale is 340, goods sold here. So here see, goods sold 380. Right, that is normal goods which has been sold. So 60 packets. So next is value of closing stock. Formula for calculating value of closing stock is goods available for sale divided by quantity of goods available for sale multiplied by units sold, unsold stock. So quantity of goods available for sale, cost of goods available for sale is 1,07,100. Quantity of goods available for sale is 340 multiplied by units unsold is 60. Units unsold is 60 packets. The value of unsold goods is 18,900. So next coming on to, we are supposed to prepare the consignment account. So consignment account, to prepare consignment account, see in the books of, so see consignment account in the books of consignor, first thing is, so what we are supposed to write, by consignee's account sales. So here we have incurred the sales, right, for by K account. So here see by consignee's account. Who is the consignee? K. By K's account. So what is the sales, total sales made? 1,06,800. See, the sales is 1,06,800. So next, what is there in the consignment account? That is any by goods sent on consignment account, that is return of goods. So any goods has been returned by the consignment, we are supposed to enter. So there is no goods that has been returned, so there is no entry for this. Next is by abnormal loss. So there is an abnormal loss over here, right? So we have an abnormal loss over here. So what is the value of abnormal loss? So here see, so abnormal loss was worth of rupees 18,300. We have calculated the value of abnormal loss, 18,300. So in this 18,300 also we have sold the goods. So here they says here, right, they also sold, the damaged packets were sold at rupees 100 per pack. So why 18,800 minus sale value which we have sold 6,000. So the value of abnormal loss will be 12,300. So next is by consignee's account, goods used by consignee. If any goods has been used by consignee means we are supposed to write here. So consignee has not used any kinds of goods over here. So next is stock on consignment account. So what is the stock on consignment account? That is the closing stock available. Yes, we have a closing stock over here. So by stock on consignment account, closing stock. So the value of closing stock is 18,900. So that's it. So this we will talk later. So next coming on to the debit side. On the debit side, what we are supposed to record? Stock on consignment account, opening stock. So there is no opening stock over here, there is no previous stocks and all. So next coming on to by goods sent on consignment account, the consignee has sent the goods to the consignor has sent the goods to the consignee, right? So we are supposed to enter that. So what he has sent, 400 packets of rupees 300 each. Two goods sent on consignment, 400 multiplied by 300 is 1,20,000. So next is by bank or cash account, any consignor's expenses. Yes, consignor's expenses is there to bank account 2000, that is freight and insurance. So next coming on, so the next is by consignee's account, expenses of consignee. See, we have three kinds of expenses of consignee. One is go down rent, carriage outwards and clearing charges. So next is by to consignee's account, commission if any. Yes, we have paid the commission of 10%, so we will be recording that to case account commission, that is 10,680. So bad, next is two bad debts. There is no bad debts over here, so we will not be recording that. Next is balancing figure. So coming on to this, we have debit side is lesser, debit side is more than credit side. So why this says that we have that the that is B company is facing a loss on consignment. So if the credit side is more means that is profit on consignment. If the credit side is less means that is loss on consignment. So by profit and loss account, loss, that is loss on consignment worth of rupees 480. So next coming on to, we are supposed to prepare case account, that is consignee's account. So how we will be preparing consignee's account? So what and all the things there will be in the consignee's account? Yes, here consignee's account. So on the credit side, we are supposed to enter expenses of consignee by consignment account. See, expenses of consignee, recording X by consignment account, expenses 5,800. So next is by consignment account, commission by consignment account, commission paid to the consignee. Next, if any advances paid to the consignee, we will be recording in the consignee's account by bills receivable. So here we have paid the advance worth of rupees. Yes, we have paid the advance worth of rupees 60,000. So in the form of bills receivable, by bills receivable 600, by bank account. So this is the balancing figure. On the debit side, to consignment account, sales, if any sales has been incurred, we are supposed to enter that by consignment account. Sales we are done, right? So sales has been done over here, that is 1,06,800 by sales. So next, before we'll be saying this later, so what and all the things we'll be preparing in the books of consignor? One is consignment account and consignee's account, the goods sent on consignment account. By consignment account, how will be recording this consignment account? There is only two entries over here. Two things will be recording. One is by consignment account, and then what means how much is the goods sent on consignment, and then on the debit side to trading account, because this one will be recording in the trading account. So by to trading account 1,20,000, that is balancing figure. Done. So coming on to this abnormal loss account, as I said earlier, I will be saying how to prepare abnormal loss account. One thing you are supposed to understand here is the journal entry for abnormal loss. If there is any kind of abnormal loss, means the journal entry for this is abnormal loss account debtor to consignment account. So abnormal losses, we have an abnormal loss over here, right? So what is the value of abnormal loss? Means 12,300. So how we will be recording in the treatment of journal ledger? Means, so one is in the abnormal loss account will be debiting this, and in the consignment account will be crediting is this. See, in the consignment account we have been credited by abnormal loss 12,300. In the abnormal loss account will be debiting to consignment account 12,300. So next, on the debit side you came to know how to write. So that is by consignment account what is the value of abnormal loss. Next, on the credit side, what and all will be recording means if there is any value incurred, if we have received any value from the insurance company by bank account, where will be amount goes to? By bank to bank, right? So by bank account, insurance company. In the question they are saying here, see. So here in the question, the consignor received rupees 400 for the damage packages from the insurance company. So by bank account 400. So any balancing figure will be transferring to profit and loss account. By profit and loss account 11,900. So this much is the entries we are supposed to be prepared. So any doubts, please revert back. Thank you.